What's up, YouTube fam? Welcome back to the channel. This video is going to be a little controversial, but it's going to be why I think nobody should really try to trade. And I know it's going to sound crazy. I know you're thinking, Jared, what are you talking about, right? But the reality is most people are not destined to be traders. I mean, the statistics just say it, right? The statistics show it over and over again. Most traders lose. People who do make less decisions regarding their portfolio outperform those who try to micromanage. And there's just plenty of reasons to believe why most people should not be trading. So that doesn't mean that you can't take advantage of the market. That doesn't mean that you can't have fun, right? That doesn't mean you have to just sit and watch the same boring, portfolio that barely moves. But what it means is you need to come up with a strategy that actually suits human tendencies, right? Because a lot of the things about trading just don't really suit our natural tendencies as humans. So one strategy that I genuinely do think suits the average person and is a lot better for the average person than trading is selling options, specifically selling cash secured puts. Now the reason being is I don't think majority of people are meant to short the market, right? We're not good at being pessimist. Most people I think naturally want to believe the future will be better. So when it comes to the overall market, trying to take shorts in general, I just don't think it's for the average person. Like, yes, there are people who are short sellers and do well. Not any that I know personally, and I'm sure if you're listening to this, you probably don't know many either. But the point is, for the average person, the only thing that really makes sense and the only thing that's really going to win is dollar cost averaging into winning assets. Now, when it comes to selling puts, it's a strategy that allows you to dollar cost into a winning asset. So how is that possible? So let's pull up the RGTI trade that we're currently in. And as you see, right now, we are currently in this position. It is a $16 strike, and the stock is trading at $19.51. We're already up 12% with a possibility to make all of this as well. So, why is selling puts work for the average person, right? Why does it make sense? It's because ultimately, as long as it goes up, you are going to profit, right? And if it goes down, then you don't have to worry about the position unless it comes below your strike. And even then, you don't have to worry about it, right? You're just getting an entry that is a lot better than where it's at the current place. And you can't forget that, right? Like, oh, maybe you think you're able to time the market. Oh, maybe you think you're so smart. Maybe you think you have a crystal ball, and you probably don't, right? You probably wouldn't be watching this video if you did. So what you need to consider is this is 18% below where the stock is currently traded. So let's just say tomorrow something happened and it's at $16. Yeah, it'll be very easy in hindsight to say, oh, I could have just waited 20%. But we don't know when that's happening. And a lot of these assets end up just flying up, right? Like if we go to this stock chart and just pick a random stock and you really zoom out, it just flies up, and we could talk about so many stocks, right? So for you to sit there and wait for red days, to me, it looks like you're going to be waiting your whole life, right? So that's just not a sound strategy. So ultimately, something like selling puts allows you to capitalize on a green day, capitalize on a consolidation, capitalize on if it does this and stays above your strike. And if it goes below your strike, you can, one, get assigned and just take the shares because it's a stock you wanted to dollar cost average into anyway. And two, you can either roll your strike, right? Roll your options position. Okay, so right now we're on, I think it was the 11th, or let me see. I'm trying to think of which date we sold the puts for. Was it the 17th? Yep, so we sold the 17th, right? And if we really wanted to, we can roll it to the next one and take our strike from 16 down to, in this case, 15. So that's a whole dollar, right? And that's only at this moment. Obviously, the options market is ever changing. But the point is you're making money if it goes up. You're making money if it stays sideways. You're making money if it, goes down but stays above the strike. If it goes below your strike, you have plenty of ways to save the position. As opposed to trying to just trade, right? Hypothetically, the average person takes a trade like this. Their stop loss is here. Boom, comes down, stops them out, then goes up. It happened to all of us. It's happened to me so many times. And I'm sure if you're watching this, it's happened to you too. Then you're frustrated. Then you take the opposite, lose that. Next thing you know, all your money's gone. When you could just be trading a sound strategy that allows you to capitalize on majority of market movements, right? Because think about it. The market can only do 5 things. It can either go down fast, go down slowly, consolidate, go up slowly, or go up fast. And you're literally profiting on all of these. So basically, there's only really one possible thing. And even if it does this, it still has to go all the way below this, which you're picking a strike that is a strong support level. So majority of the time, it will actually bounce off your strike if it does get that low and then continue back up. So there's so many things that go in your favor, right? Like when it comes to the game of trading, the game is basically rigged against you. When it comes to the game of option selling, specifically doing it the way I do it, the game is rigged for you. And if it's assets that you really like, there's really nothing that can come out of it that's negative other than you getting a low entry and riding it back up, then selling covered calls to get out of the position. So I tried to make it as simple as possible, as crystal clear as possible. I hope you enjoyed this video. If you want to see more, right now we're at 2300, or sorry, 23.8. We've been having a great week just bouncing our portfolio back. I mean, you know, I can't complain. We took it all the way to 25.2, down to 19.1, and now here we are, 23.8. We've learned a lot along the way. We've documented every single position on the journey. You guys have learned with me firsthand. I want to shout out everyone watching this. And if you enjoyed this video, make sure to comment your thoughts. Make sure to subscribe so you see what we do tomorrow with this account.